Hello everyone, I hope you are all doing well. Once again, I'm here with a new video. In our previous video, we learned about single candlestick patterns. Today, we'll be looking at double candlestick patterns. Double candlestick patterns are mainly of 6 types. Bullish engulfing candle, bearish engulfing candle, bullish harami candle, bearish harami candle, piercing line candle, dark cloud cover candle. Please watch the full video with full attention. If you pay close attention, you'll be able to understand these double candlestick patterns very well. Plus, you'll be able to easily identify these patterns on the chart and know where to enter the trade, where to exit the trade. So, without further delay, let's dive into the core content of the video. Bullish engulfing candle. The first candle is red, and the second candle is green. You must observe that the first red candle is relatively small, and its upper wick is very short or non-existent, while the lower wick is comparatively longer. The second green candle has a moderate-sized wick and completely engulfs the previous red candle. If you see such candles on the chart, you can assume it's a bullish engulfing pattern. This pattern usually forms when the market is moving down and hits a support level. After touching support, the market starts to move back up, and that's when this candle forms. If this bullish engulfing pattern forms at a strong support level, that is your signal to take a long buy trade. Then, look for the nearest resistance level to take your sell or exit from the trade. Let's now look at a live chart example using TradingView. On the chart, notice this red candle is smaller than the green candle, has no upper wick, and a small lower wick. The green candle has a medium-sized wick, so we can confirm it as a bullish engulfing. Before trading, identify a strong support level. Draw the support line and wait for the price to close above the high of the red candle. That's your entry point. For exit, find the nearest resistance level. Once price reaches there, close the trade. A trade from here to the resistance can generate a huge profit. Bearish engulfing candle. The bearish engulfing and bullish engulfing patterns are quite similar but in reverse. In the bearish engulfing, the first candle is green, and the second candle is red, which completely engulfs the previous one. The green candle usually has a long upper wick and little to no lower wick. The red candle has a moderate wick and a large body. This pattern forms when the market rises up and hits a strong resistance. After touching the resistance, the market pulls back down, creating the bearish engulfing. If you see this pattern at a strong resistance level, you can take a short sell trade. Exit the trade at the nearest strong support level. Let's look at this on the live chart. Notice the small green candle followed by a large red candle. This is a classic bearish engulfing pattern. Again, identify a strong resistance level before entering the trade. Once confirmed, take the short trade and exit at the nearby support. From this trade, you can also make a significant profit. Bullish harami candle. In this pattern, the first candle is a large red candle, and the second candle is a small green candle, about 1/3 the size of the red candle. This pattern forms when the market is falling and then hits a support level. If you see this formation near a strong support, you can take a long trade, but you must wait for confirmation. After the small green candle, if the next candle breaks the high/wick of the red candle, that's your buy signal. Place your stop loss below the low of the red candle. Let's analyze it on a live chart. Here, the red candle is large, and the green one is small. Draw a support level. When price breaks above the red candle's wick, enter the trade. Exit the trade at the nearest resistance level. From this, you can make huge profits. Bearish Harami candle. Similar to the bullish Harami, but in reverse. First candle is a long green candle. Second candle is a small red candle, about 1/4 the size of the green candle. This appears when the market is rising and hits a strong resistance level, then starts to reverse. If you see this pattern at resistance, you can take a short trade. Check the live chart for better clarity. Notice the big green candle followed by a small red candle. Confirm a strong resistance, then take the short trade. Exit at the nearest support level. Place your stop loss above the upper wick of the red candle. Piercing line candle. In this pattern, the first candle is a large red candle. The second candle is a green candle, which opens lower but closes above the 50% mark of the red candle. This suggests a strong bullish reversal signal. This pattern usually forms when the market falls quickly, then touches a strong support level, then forms the piercing line candle. This is a signal to take a long trade. Place your stop loss at the lower wick of the green candle. Let's check it live. On the chart, the green candle has closed above the midpoint of the red candle. Confirm a strong support level first. Enter the trade and exit at the nearest resistance. Dark cloud cover candle. This is the opposite of piercing line. First candle is a large green candle. Second candle is a red candle, which opens higher but closes below the 50% level of the green candle. This indicates a bearish reversal. Usually occurs when market is rising, hits a strong resistance level, then starts falling again. This is a signal to take a short trade. Place your stop loss at the upper wick of the red candle. So viewers, in today's video, we discussed all the double candlestick patterns. If you've watched the video attentively, you should now be able to understand and identify these patterns easily. Know where to enter, exit, and place your stop loss. If anything is unclear or confusing, please comment or re-watch the video. That will surely help. Also, if you haven't watched the single candlestick pattern video, make sure to watch that as well. In that video, we covered bullish Marubozu, bearish Marubozu, hammer, hanging man, inverted hammer, shooting star, doji candles. We explained each in full detail, which will help you recognize them on charts. In the next video, we will cover triple candlestick patterns. So be sure to subscribe to the channel and stay with us. Till then, take care and stay healthy.